But I think we could start with oil. And David, I think you've got a few things to talk to us about there.
Yeah, what's interesting about oil is for so long, most people had thought that oil, including me, but thought oil would move in a kind of $50 to $70 trading range. And I was originally at one point a massive oil bear. I thought it would go down to $20. How wrong I was about that. Anyway,
you can leave now.
Yeah, exactly. But so we thought it would stay in a $50 to $70 trading range, and boy, has it broken out of that $50, $70 trading range. And what was particularly taken, a good hedgy friend of mine, who's usually he's usually a bit dismal in terms of his predictions of the collapse of the global world economy and our return to a Stone Age civilization. But he sent me an interesting report, which I thought, by an outfit I hadn't heard of, which is a Swiss, I can only imagine, asset manager sort of hedge fund called Berggraben.
Okay, Graben. I like that.
Exactly.
Yeah, that's what they do.
Berggraben. It sounds like some kind of Swiss kind of alpine resort or ski resort.
Or a burger bar.
Or a burger bar. Anyway, but one of the best papers I've seen recently, the most cogent papers I've seen in the last 3 or 4 years on the state of the oil market, and they started off with a comment by one of the most famous experts in the oil field, Myron Watkins, says, with oil, the problem with oil is that there's always too much or too little. And what he was referring to, what they're referring to, was that what matters is the marginal supply and demand at either side.
Yeah.
People get very obsessed about the big numbers. It's the little 1 or 2 million barrels a day output changes on either side, or demand changes, that make a difference. And what was so interesting about this Berggraben paper was, and it was a great paper, by the way, I definitely recommend reading it, is that they basically think oil will go to $100 by Q3 2019.
Like Bank of America.
Yes.
Yeah.
And that, I think, if that is right, it's pretty devastating, because what that basically means is that you've got a lot more inflation in the system, and people like me have been arguing that inflation we haven't got much to worry about.
No.
And the viewers are wondering, well, why does inflation matter? Inflation matters because it affects interest rates, and if they put up interest rates sharply, that's likely to result in a increase in volatility and the decline in the stock market. Yeah. So if inflation really does become a major problem, that has huge knock-on impacts. And if oil does go to $100, and the argument that the Berggraben guys make, it's very cogent, and I have to say I found it difficult to argue with it. And what they're fundamentally saying is that everybody's saying, oh, well, US unconventional oil, gas and shale is the great disruptor. When they go, well, no, it isn't really, because it's just not going. If we 100 million barrels of oil produced today, they're not going to make a big difference beyond 2 or 3 million barrels of oil a day. And there's some astonishing.
But that could make the marginal difference that you talk about.
Could make the marginal difference, but the reverse is that demand is much stronger than everybody thinks it is at the moment. And even if it was making 2 to 3 million barrels with a marginal difference, it would require replenishment rates in the Permian Basin, which is the key shale formation in Texas, at 33% a year.
Okay.
That is an astonishing replacement.
That is a
rate.
lot. Yeah.
That would require not a tsunami. That would require
what's underwater tsunami?
Yeah, but a large amount of money being pumped into the capital markets to be able to sustain that amount of increase in output. And even then, it would only make a difference between 2-3 million barrels of oil per day. The Saudis can move 2 or 3 million barrels of oil per day, but actually, if the Venezuelan production stops and it's down to about 1.7 or 1.5, that could go out straight away. And there's always geopolitical disruption.
Well, we have Iran, don't we?
We don't want to talk about the Iranians,
but we can.
We can, and that could make a difference. And their fundamental core argument is that we're underestimating the increase in demand for oil, and we're overestimating the potential sources of new supply. And of course, they then make the strong argument, which I think is difficult to argue with, is that the amount of new offshore fields, for instance, the amount of big capex expenditure that's gone on in the oil industry has been severely curtailed in the last 2 to 3 years, and therefore there's no big mega fields coming online properly outside the unconventional shale guys. So fundamentally,
there's one point though. You have clean energy, green energy, all that nice stuff from the sun. Doesn't that make a difference?
No, not really. Not for the demand for oil, because it's not going to. There's not millions of electric cars out there.
Yeah.
There will be in a few years' time. There's not millions. There's certainly not millions of electric lorries out there.
Yeah.
Certainly not millions of electric cars out there, and there's certainly not millions of electric boats out there. And so the things that largely consume oil are not massively impacted by that. Now that has an impact maybe on gas. because gas is used as a fuel stock for the power
Yeah, I see.
industry.
Yeah, so that's right.
So
yeah.
it might have an impact on gas, and certainly the predictions about increases in gas prices are nowhere near as optimistic. But oil, not so much.
Yeah.
So, do I think that oil could go to $100? Well, hey, I thought it was not going to go above 70, and it's gone above 70. I'm not completely convinced it could go to $100, and I'll tell you the reason why.
Yeah.
Is I just don't think the Saudis would be terribly happy, because I think the Saudis aren't stupid, and they know that if oil prices go too high, it pushes the global economy to recession, and then they're back at $30 a barrel, and they go for this stop, start, massive increase, massive decrease, massive increase cycle.
And they may upset their new friend, Mr. Trump.
And it upsets the new friend, Mr. Trump. So I think the Saudis will probably lean on their OPEC friends to massively increase output of oil. And maybe there might even be a kind of round robin and help the Venezuelans pay enough to their oil workers so they can actually eat, so they can produce oil.
Oh, that really is a permanent solution.
Yeah, that would be, wouldn't it?
Yeah.
So I don't necessarily think that oil prices will go to $100, but as long as the market thinks oil prices will go to $100, what that does mean is that those inflationary concerns are out there. And as long as those inflationary concerns are out there, the central banks, particularly the US Federal Reserve, is likely to be more hawkish. They're likely to increase interest rates quicker, sharper, and by a bigger margin. And that also puts jitters under the stock market, although, of course, it's not bad for energy stocks.
Yeah, but one point more on oil is this seems to me an interesting moment for a leverage position of some kind.
Yeah, well, I suppose if you buy the logic which I've just suggested,
Yeah.
you'd be quite long.
You'd be
quite long oil.
You'd be quite long oil. You might even be leveraged.
Yeah, exactly. Because I mean, I've lost track of where the oil price is, but if it's going from, let's say, median price about $75 over the last few weeks,
Yeah.
and it's going to go to 100 by 19, to be fair. But if you're going to go, that's a big old move.
Yeah. Well, that's right. Okay, so we'll keep our eye on the oil price, and I'm going to go long as soon as this interview's over.
Okay.
And thanks for the tips. Sorry, that's open transparency.
Yeah, I must say, by the way, I've been long energy stocks myself for a very long time.
I must be honest. I've got a few tucked away as well.
Yeah, so I personally think the oil equity sector is a good place to be anyway.
Yeah.
Because I think even if oil prices stay at $75, it's good for the oil companies. They make profits.
Yeah.